If you've been in the real estate space for any amount of time, you've probably heard the term location, location, location. That simply means the better location you buy a property in, the better appreciation you're going to see, the better values you're going to see all across the board. And so I get the question all the time from real estate investors on where should I be investing my money? And so sometimes that is locally, where should I be investing my money? Sometimes that is within the US, which state should I be investing my money? And sometimes that's even internationally, where should I be investing that money? And so today we are going to dive into 5 metrics that you should be paying attention to when it comes time to choose a location for your long-term rental property. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we get into today's video, make sure you take a moment to hit that like button, leave us a comment below about any questions you might have, and don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. So it's officially time to dive in and figure out exactly where you want to buy your first real estate investment, or maybe you're exploring other markets just to see where you could potentially put your money for your next real estate investment. Today we're gonna dig into 5 metrics to pay attention to make sure that you're investing in a spot that's going to continue to grow and create the passive income that you're looking for. Metric number 1 is population growth. This is one that we want to take a very close look at. A place with a growing population shows positive signs for the future for that investment location. Increased population growth means more demand for rentals, more demand for homes to be purchased. It means growth in the economy and continued appreciation on whatever you invest your money in there on the area. So you definitely want to make sure that wherever you are looking to invest in is somewhere that the numbers are increasing every single year rather than decreasing. If there is a decrease, occasionally there is a time and a way to explain that for some various reason, one way or another. But most typically, we want to be looking for a place that is growing in demand, growing in economy, and the population growth is a telltale sign that shows you that more people are going to that area. And if you do invest there, you can likely see increased rents over the future. Metric number 2 is job growth. You want to be looking for a place that has an increase in job opportunities. This is what will attract people. And so maybe the population growth metric isn't quite there yet, but there's a ton of job growth. That one usually shows us that the population will follow, but if you can find the two that are working together, this is going to be a great combination. Job growth attracts people to the area, it shows signs of a strong economy, and it shows that people who are much smarter than us, who are creating businesses and bringing in warehouses and all sorts of development and tech and all of those pieces, are investing their money there to put their businesses in the area that are creating those jobs. So take a very close look at the job growth, make sure that is a positive number that is steadily growing, make sure it's not just a boom from one company that entered the area as a test experiment and maybe on their way out, make sure it's a long-term stay for them, but we wanna be looking for an area that has been consistently growing for 5 years or more that shows you promise for the future. Number 3 is wage growth. You want an area that people are being paid more and more on an annual basis. Why? Because that means you get to charge more and more for your rents on an annual basis. As their salaries grow, so does the rent. As their salaries grow, there's more demand in the market to purchase homes, which brings up your appreciation for your long-term appreciation factor. So the wage growth is a very good thing, showing a strong, stable economy. And again, that's going to be because of job growth and population growth that's going to put the pressure on the wage growth. And that those 3 together are going to show you a very, very strong market that will lead to long-term growth in your portfolio, both on the appreciation side and on the monthly and annual rent side of things. So keep a very close eye on this metric to make sure people are being paid more in your area. Number 4 is rental rates. Now we're shifting a little bit out of the actual economy as far as jobs and population and some of those pieces go, and now we want to take a look at rental rates. we want to make sure that we are finding an area that brings in higher rents than other areas. We will compare this here in just a moment to prices to make sure that you're finding a spot that you're investing your money wisely, but you want to make sure the rental rates are the highest you can possibly find in your area within your budget. The more rental rate increase you can find, the better profits you are going to find on a monthly basis for your property. To find this information, you should be looking at sites like Zillow.com and Rentometer if you prefer to have a subscription basis. These will allow you to identify the areas that are bringing in higher rents than other areas. Do your research ahead of time or work with a real estate investor friendly agent that can help you find these areas and help you identify the area with the highest rental rates so you can find the highest return on your investment. Last but not least is home values. This obviously plays a crucial role in your investment strategy. This is going to determine whether you can actually buy in an area according to your budget or not. So have your budget set, find the areas that fall within that budget, and then take a close look at which areas are growing the most on the appreciation side of things. So don't just buy in an area because it fits within your budget. That doesn't make it a great investment, or even if it's at the high end of your budget, it doesn't mean it's going to appreciate at a better rate than other areas. Take a close look, city by city, state by state, as far as where you're seeing the highest possible growth in home prices. Home values also show you a strong economy for a local area. A local area that is losing jobs and losing population is typically going to see a dip in appreciation. It doesn't mean it's necessarily going to go negative, because we don't usually see that here in the US unless there's some major turn in the economy. But if you're seeing dips in the growth, it's going from 5% to 4% to 3%, that's showing you that home values aren't doing as well. And you should be looking for an area that is growing, or at the very least, just staying the same for its home value appreciation. So let's wrap it up. We've got 5 things for you to look at. You should be looking at population growth, job growth, wage growth, home values, and rental values to evaluate a great area for your real estate investment. We're going to use all of those factors together, not individually. Not just because one area has population growth does not mean all of those other factors are gonna follow, but use all of those together to grade areas and to hone in on an area that fits your budget, fits your preferences according to how you want to run your business, landlord laws, all of those pieces as well. Take those into account and then lay over these numbers to say, hey, here's the top 5 cities I should be investing in the area I've identified, because all of these statistics are working together to show a strong economy, strong home price growth, strong wage growth, and bringing in great rents. If all 5 of those line up, that place is going to be a home run for you as far as the rents go and the profits that you will make there. So take the time to do the research. This information is not hard to find, I promise you. If you just Google the top 5 cities in the United States with job growth, the top 5 cities in the United States with population growth, and if you bring all of those lists together and find one that hits on 4 out of the 5 points we just discussed, that one's going to be a win for you. It should not take you long to find that information, but narrow it down city by city so you know what your buy box looks like and you can get out there and hit a home run. Thanks for watching today. As always, be sure to hit that like button. Leave us a comment below about any questions you might have or any hot spots you've got that hit those 5 points and criteria. And don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. We'll see you next time.